Alright, how's it going, traders? Don't know why I asked that, you can't answer me. I hope you're doing well. In this video, I'm going to be showing you how to backtest the ultimate pullback indicator. So there are two main styles of trading we can apply to this indicator. The first one is just a pure systematic approach. You set up your settings, you find something that works, and then you simply trade every signal that the script generates. That style of trading is obviously more suited to fully automated trading. I don't see any reason why you would do that manually if you have the option to fully automate it. You can fully automate the ultimate pullback indicator using Pine Connector and or auto view. You can't use both at the same time in this script. You could set up multiple alerts for both. If you set up auto view, for example, and set your alerts, and then disabled auto view and then set up Pine Connector and set your alerts, you could trade through both services. I'll show you how to set up auto view and Pine Connector in a different video. Today's video is not about that. Today's video is about manually backtesting this indicator so that you can prove that it works and get an idea for the performance metrics that the strategy will produce. So your max drawdown, for example, how many trades it lost in a row during its worst losing streak, and how much it returned over a given period of time, things like that, which can inform how you trade the indicator in terms of how much risk you place per trade, which markets you trade, which time frames you trade, and so on. So without further ado, let's get into today's lesson. I'm going to start this lesson by just showing you the systematic approach. We're just going to test every single setup that appears on our chart. We're going to enter that into a spreadsheet and see how the indicator performed. So right now I am on euro dollar through the global prime brokerage data feed. And this is my main broker that I trade through, which is why I'm testing on this broker. I do trade the ultimate pullback indicator on the euro dollar with the default settings on the 1 hour chart. That's what we're on right here. This is the latest version of the ultimate pullback indicator, and I'm happy with how it's performing. And so this is going to be the one that I release as version 3. Obviously, I'll fix any bugs that pop up. I'm sure there are some that I've missed in my own testing. I'm only one man and I only have the same 24 hours in the day as you guys do. So hopefully you guys can help me out with this. If you do notice any bugs, send them to me and I will fix them as soon as I possibly can. Now, before we begin today's lesson, if you are uncertain or unconfident in the role that backtesting plays in success as a trader, if you've heard that backtesting is a waste of time or that it doesn't work for whatever reason, I encourage you to go and read my blog post or watch my video. I did a video on this. You can find it at backtestingfx.com. So backtestingfx.com. If you go to that URL, it will redirect to my blog, which contains a short write-up on why I believe backtesting is important and how it's helped me in my own trading to find success. And there's a video here somewhere on strategy development as well. You can also get the spreadsheets that I use to backtest, my actual private spreadsheets. Well, they're not private now, they're on the internet, but you can get access to them from this blog post. You can also get them from beneath this video. But anyway, I'll leave that to you. If you are uncertain about backtesting, go and check this out, see what you think. Backtesting is one of those things where there's just no reason not to do it. You know, it's like we have this resource at our disposal where we can, if the script didn't perform well over historical data, what gives you the idea that it would start suddenly working on live data? So backtesting is important. I think all of the best traders that I look up to use backtesting in some form. Even the algorithmic traders, automated traders, they still test their systems to make sure that they're viable. So today I'm going to show you the process of doing this manually. You shouldn't depend on these stats up here alone on these little backtester displays. Even though they're as accurate as I can possibly make them in the code, you still need to verify this information just in case there's a problem, there's a bug, or you've set up a setting that just produces incorrect results. You want to confirm that through manual backtesting. So that's what we're going to do right now. Let's get into it. So the way I backtest is I first have a spreadsheet. Here's my main spreadsheet. It's a lot more complicated than the one that I give you guys for this course, because this is my actual spreadsheet for trading live markets. And I've just adapted it for this video to backtest this market. You don't need all these bells and whistles, like which days it performed well on and your which time of day, and I have a whole bunch of metrics here that this tracks. You don't need to know all this stuff in order to properly backtest the system. So I just give you a very simple spreadsheet that won't overwhelm you with too much information, but does exactly the same job. All we're worried about is the stats up the top here, and our drawdown, total gain, and how much money we make. That's what trading is all about, managing these three things: drawdown, total gain, and the money we make. So you can see that I've already entered 90 trades here manually. I've gone through the process of entering each trade manually. All I do is I record the date of the trade, the stop loss size in pips, and the target in pips. If it's a winning trade, it's a positive number. If it's a losing trade, it's a negative number. Right now, I'm just testing 1-to-1 risk reward profile, just to confirm that the default settings of the script are working fine. So let's get started. I obviously have I actually have 3 screens in my office. You only need 2 for this process. You can get away with 1, but it is a real pain in the ass because you've got to keep alt-tabbing between the screens, between your charts and your spreadsheet. So if you have a laptop spare or just a spare screen, that would really help this process, but it's not needed. It's not necessary. It's just, it'll make you a happier person at the end of the day. You'll be a little bit less grumpy at the end of your backtesting process. Let's get into the lesson for today. All I'm going to be doing is I'm going to just run you through backtesting a few trades here. We're not going to do 100 like you see here, 90 trades. I'll just do 10 or 20 and just walk you through the process of entering this stuff into a spreadsheet. I mean, it's pretty simple. It's not rocket science. You spot a trade on your chart, you record the date and whether it won or lost, and the spreadsheet does all the heavy lifting mathematically. So let's jump back over to the chart. I'll put these together like this, and that way I can use Control 1 and 2 to split between them. That could be helpful too if you're working on one screen. So let's record this next trade, 21st of November. This is a good place to mention the UPI script has a limit on how many labels can draw onto the chart. So you know how it draws the stop loss size? Unless you're using the replay tool, if I put the replay tool on, it'll disregard all of the price action to the right here, wherever I place the tool. And so it will allow the script to display more labels on this price action. But because we have so many signals drawing onto the chart, there's a limit to how many labels can display on the chart. So I don't actually use the UPI version of the script to backtest at the moment, because I've written the UPS, the strategy version, in such a way that it draws my stop loss and take profit size straight onto the chart, as you can see here. So you can see right here that the stop loss for this trade was 40 pips. So let's jump over to the spreadsheet and put in 40 minus 40 because it was a losing trade. And let's move on. Another losing trade. I hold Alt, or I think it's Command on a Mac, and hit V to put in this vertical tool, and that instantly displays the date and time. That's just a cool trick I learned from Stephen Hart, my trading mentor, who taught me how to backtest through TradingView. It's a very handy little shortcut there. Saves a lot of time with moving your mouse around. So I just hit Alt V there, put a vertical line, 26th of November, and we had a 17 pip stop. Losing trade. Let's move on. Another losing trade. Picked a good time to start testing. 4th, the 12th, 18, and a 35 pip stop. Finally, a winning trade, 5th of December, and a 21 pip target hit. And another losing trade followed by a winning trade, so 6th of December, 30 pips. 7th of December, 47 pips. It was a winning trade. Nice. And you'll notice that when you're trading this with a 1-to-1 risk reward but a high win percentage, you will encounter losing streaks now and then, but followed by pretty decent winning streaks that tend to make up for your drawdown eventually. So 27. Just quickly, while editing this video, I realized I made a mistake here. I accidentally hit a hotkey button that broke my spreadsheet, and I had to Google how to fix it. And after I fixed it, came back to recording the lesson, I forgot to enter this trade into the spreadsheet. So that was a mistake. I didn't mean to skip this trade. Try not to do this in your own testing, as it obviously gives you false statistics. Try to be 100% accurate in your testing. I was rushing through this and I overlooked that trade. Sorry about that. So moving on, we have another losing trade on the 11th of December, 21 pips. Another losing trade, 12th of December of 28 pips. Winning trade, 18th of December on 2018, 32 pips, followed by another winning trade on the 19th of 33 pips. Another winning trade. Now this is a bit of a funky trade here. You can see that there's a gap after this signal. Now that's not a common occurrence, and it won't always occur depending on which type of broker you're using, but Global Prime does have a few gaps in the price action. The strategy script is saying that we entered on this bar here at the open of this bar. If I was trading this manually in real life, I would have put a limit order at the close of this price and I would have been filled up here, not at the open of this candle. Just something worth noting, but this would have played out profitably regardless. So 3rd of the first 19, 23 pips, winning trade. Now this is a weird trade. This is an example of a trade I wouldn't take in my discretionary trading because we're clearly in consolidation here. I would have taken a setup if it had occurred here, but this is in the middle of this ugly consolidation. But because I'm teaching you how to backtest this systematically, meaning we take every trade that the script generates, regardless of how we feel about it, because according to the settings we have, it is profitable. It does have a high win rate, so it's profitable to take every trade, even though some of them are going to look like this. And for that matter, this trade did win, even though I wouldn't call this a pullback trade, but it still won. So that's one benefit of just trading this systematically. In the next video, I'll show you how I use my discretionary rules to avoid trades like this. But for now, we're just going to log this into our spreadsheet because the script picked it up and we're trading every signal the script detects. So 19 pip winning trade. Moving on, we need 2 more winning trades to get out of our drawdown here. And here's one, 14th of January, 20 pips. So we're nearly out of our drawdown here. And then another losing trade, followed by a winning trade and a winning trade. So we're out of our drawdown, but let's log these into our spreadsheet. So 19th of January, we had a 18 pip losing trade, followed by a 26 pip winning trade. Now it does look a bit funny when you have a losing trade followed immediately by a new signal. So we just got stopped out on this bar and then we got a valid short signal on the very next bar. There's no way to stop the script from drawing this line up here and connecting these lines. So it does look a little bit funky when this happens, but you'll get used to this. It doesn't happen very often. So 26 pip winning trade, followed by a 17 pip winning trade on the 22nd. So there we go. We're now out of our drawdown. So we're back up to new equity highs after a significant streak of winning trades. So this really is the backtesting process. It's quite simple. It is monotonous. It does take time. It is very boring, but it's necessary to be successful as a trader, I believe. Anyway, others might tell you differently, but this is what worked for me. Until I discovered backtesting, I was a losing trader, consistently blowing accounts. Once I discovered backtesting, took it seriously, went through the process, I became profitable. And so maybe it's a coincidence. I doubt it, because I only trade strategies now that I verify have an edge over the markets. And the only way to do that is through testing. Forward testing is an option as well, doing this on a live market. Problem with that is to get 100 trades in a live market test could take years. I mean, this is from the 1st of January 2018, and we're now in the 1st of January 2019. That was exactly 100 trades, basically. So 100 trades over 2018. If you wait to trade on live markets to get 100 trades sample size, and I would say this is the minimum sample size, I would recommend you test at least 100 trades. I aim for a couple hundred at the minimum, if I can, depending on the time frame, obviously. But I do encourage you to get at least 100 trades, because that will reveal whether you're just being lucky or whether this strategy does in fact have an edge. And so having a 65% win rate over 106 trades, there's a bit of luck in there. That's a really high win rate, but it's over a large enough sample size of trades that I feel confident and comfortable trading this strategy into the future. And I have been trading this strategy for quite a while on this market, and I can verify that it does in fact have a decent edge on this time frame, the 1 hour chart on euro dollar. Anyway, let's do just a couple more trades here. Let's do maybe 4 more, and then I'll show you how I trade this with discretion. So here we have a winning trade of 30 pips. Followed by a pretty frustrating losing trade here. We came within a fraction, basically within the spread of hitting our profit target here. If you're systematically trading this strategy, you would not exit your position just because this happened, because that starts to mess with your metrics. You have no idea, unless you go through the backtesting process, you have no idea how often this happens, but then the market comes down to nearly stop you out and then comes back up to fill your profit target. Now, personally, in my trading, if I was trading this manually, I would exit my position. I'd at least put my stop loss to break even after this happened, because we got so close to the take profit. And if I didn't do that and price came all the way down to nearly stop me out and then came back up and nearly hit my profit target again, I would definitely move my stop loss to break even. But if you're automating this strategy, the script can't do that unless you set it up in the settings menu. Of course, there is the break even distance. You could, for example, set this to 0.95, and this would set your stop loss to break even if price gets within 5% of your profit target. So if I turn that setting on there, so I'll do it on the strategy version here, 0.95, 95% to our profit target, and watch what happens. It'll draw a blue line. This blue line, price came up, hit our break even point, and then our stop loss was put to break even, and this trade ended up a break even trade. Now I need to fix that. It shouldn't say long exit 20 pips. It should be 0 pips, but I'll fix that. That's just a display bug. The tester system will not record that as a winning 20 pip trade. But anyway, that's just an idea for you to explore, play around with, especially if you're automating the system. Maybe you don't want this to happen. You could even set this to 99%, really. Now you can see the line's much closer. That's not a bad idea to do that. What that means is that as soon as price gets within a fraction, within a hair of your take profit, the automated systems will move their stop loss to break even. That's probably a good idea to do that, to avoid unnecessary losses like this one here, where we stayed in the trade, even though it nearly filled our profit target twice and then came down to stop us out. That really sucks. So that's something to think about there. But let's put this into the spreadsheet anyway as a losing trade. 20 minus 20. Because as I said, I am just trading this blindly. Whatever the script does, I do into my spreadsheet. So you can see by putting the break-even distance to 95%, we actually had 14 break-even trades over 386 trades. It slightly reduced our win rate, and it did affect our drawdown, which is interesting. So by setting it to 99% break-even distance, we have 3 break-even trades, and that barely affected our drawdown. I mean, 3 trades is nothing. But anyway, you get the idea. This is a great way to play around with just minor tweaks in the settings just to see how it affects your performance of how you want to trade the script. But let's put this into the spreadsheet, and I think we'll call it there. So 5th of February 19, 15 pip winning trade. So you get the idea. This is a really simple way to backtest. In the next lesson, I'll show you how to use discretion to filter out low quality trades. Again, a link to the spreadsheet for backtesting will be under this video. A link to the blog post I wrote explaining why you should backtest will be there. And I will record some videos explaining how to script up to automatically trade to be an automated trading system if you are comfortable with your testing results. I still encourage you to manually backtest to confirm that the settings you've set up are accurate, that the performance metrics that the script is generating is accurate, or at least close to accurate. It will never be 100% accurate because it can't account for spread, commission, missed trades, all of that stuff. But it's the next best thing we have to go by. And it does help dramatically speed up this process, because if I turn this on and we open up my Forex markets list, to find out what markets this strategy might perform really well on could take months and months of manual testing to confirm. But with this script, you can simply click on any market, and within a matter of seconds, you can see whether or not it shows promise. So you can just cycle through the markets. And so here's one that has a little bit of promise, but not great, not compared to euro dollar. Another one. And yeah, you can just cycle through these markets, see if anything shows promise. So that's how I would encourage you to use this script. As always, if you have any questions, shoot them to support@theartoftrading.com. And myself or my partner will get back to you as soon as we can. Take care. Best of luck with your trading. I'll see you in the next video.